Thank you, Oren, to join. It's my great pleasure to welcome you at the INSEAD Insurance Club. We run, monthly podcasts and so on, and we have a series on Insurtech and investors in that kind of space. I crossed your path about 20 years ago when you started at Audible, which was sold to Amazon. It was incredible already at that time, but since then, instead of having one unicorn, you have, I don't know, 6 or 10 of them. Some people call you the one-man empire in Forbes. TechCrunch, value your track record at 100% IRR. So we're all here to understand, how you do it, why you are alone. You have no secretary, no office, no analyst, nobody, only you, and so on. So I think let's do it in 3 parts. So the first part, maybe if you can tell us more about your background in INSEAD, because you are the INSEAD grad, and then maybe tell us, some of the secrets behind the Zeev method, as the press name it, and maybe we can zoom into a few examples, because it's just amazing for me.
Thank you, Minh. Appreciate it. So in terms of my background, I started as an electrical engineer. I was a research staff member at IBM in Israel. I went to INSEAD in 1993 and graduated 94J. Came back to Israel, and the whole venture capital just started in Israel. And I was lucky to have been recruited by Apex to start their operation in the US as one of 2 people. I was the junior one. 7.5 years later, I always wanted to do it. If I'm going to do it, I was always intrigued by the Silicon Valley. So in 2002, I had the opportunity within Apex to move to the Silicon Valley, which I did. And my very first deal in the US was Audible, when I met Minh, who was on the Bertelsmann side, Random House. And in fact, I had a few good investments in Israel, but not a home run. So Audible was my very first home run, which is interesting because people think these things are overnight successes. But when I look back, it took me 8 or 9 years as a venture capitalist before I really invested the investment that led to my first home run. So, these things take time. Anyway, 5 years later, I basically left Apex. And from 2008, I've been doing what I do today, which is a one-man venture capitalist with one twist. The first 8 years, I was doing it with my own money, but I was behaving as a venture capitalist, not as an angel. I was writing 7-figure checks and leading rounds of up to 5 million and taking board seats and being the main backer of early stage companies. Since 2015, I also started to raise money from the outside, and somehow this really scaled. Today, I believe I'm the largest solo GP in the world. Just the last 10 months, I raised over $1 billion, and I invested over, I think, 600 million just in the last 12 months. So, and I have a host, as Minh said, maybe 10, 15 companies already in the multi-billion-dollar stage, and each of them, I typically have 20, 30, even 40% stake. So that's also very unusual for any VC, let alone solo GP, but even other VC firms, typically by the time the company gets to a multi-billion-dollar valuation, the early stage people typically are with single-digit ownership, maybe low double-digit. In my case, most of them, I still have 20, 30, 40%. So because I'm able to continue to play in subsequent rounds as well. So basically, that's the short background. And I should say that I really credit INSEAD really for enabling all that, because before that I was on the path of an engineer. I think the window of opportunity was open to me thanks to my studies at INSEAD. So definitely I owe something to INSEAD.
So some people, if you want to raise 100 million today as a first-time fund, you need to be a team of, 3 people, right? Yeah. You raise 1 billion by being on your own. So how do you do it? I mean,
Well, to be honest, I'm a terrible fundraiser, you know. So the secret is not fundraise, you know, some secret about fundraising. I'm the worst fundraiser in the world. I tell them why they shouldn't invest in me. And it's the same, by the way, it's the same LP. So it's not like I found some special LPs. In this case, it's really the performance. There's no way around it. It's just the performance is so unusual that they're doing something that they've never done before, which is writing 30, 40, $50 million checks to a single person. Yeah, there's no secret, you know, it's just the performance, that's all.
Okay, so performance. So before we're going to go towards performance, but before, just for the audience and for people that will listen to us afterwards, people describe you as a single GP. You and Forbes wrote as you are the one person investment empire, whatever the name is.
Empire, yeah.
So just to be clear, you have no secretary, no office, no analyst, nothing. You meet people in Starbucks. I saw your picture.
No, not Starbucks. A better coffee, Italian coffee shop.
So you meet people.
Starbucks is for Americans. Anyone European or Israeli who appreciates quality doesn't go to Starbucks. So,
yeah, so this is true, right? I mean, there's no, it's not a myth that you do those investments without any office and so on. While, you know, for most VCs, you know, this is not possible, right? It's obviously not possible.
Yeah, you know, first of all, this is it. Okay, you're right. I have no analyst, no associates, nothing, no investment committee, no nothing, no off. Yeah, this is it. This is my home, but this is really my office. So meetings I don't have at home because my family doesn't like it. So I have at coffee shops or in Zoom at home. That's it. You know, I've done the traditional VC thing for 12 years at Apex. I just didn't think that it was necessary to have all this thing around to make great investments, you know, just because everyone was doing it didn't mean that one is a necessary condition. And I don't think entrepreneurs, the good entrepreneurs, I don't think they care about these things, you know. They don't, you know, they don't care about nice offices or not. They want someone who they feel comfortable with and would be fun with, and they would, you know, hopefully support them and, you know, and optimize their chances of success. And I've been very, very focused on that. I've been very, very focused on the entrepreneurs and as my customers, not the LPs. Yeah, the LPs to me are free riders, you know, they get, well, not free riders, you know, because they pay for the ride, but they're riders. They're, you know, they're taking a ride with me, and I'm doing them a favor the way I see it. They're not my customers. My customers, the people I really need to keep happy are the entrepreneurs. And I aspire to have the equivalent of a net promoter score of 100. I want every founder that I backed, whether or not it was a success, by the way, to recommend me to their friends without any hesitation and any qualifications. And this is how I test myself. So this is how I measure myself. So I would rather lose money on an investment, lose the entire investment, and have the founders recommend me to their friends than the other way around, make money and have them warn me, warn their friends about me. So this is it, just a one focus, you know, maniacal focus on supporting the entrepreneurs, giving them unconditional love, and being the kind of you know, backer. If I was a founder, being the kind of backer I would want, I want to have myself.
Okay, so the Zeev method is about the performance, right? So let's talk about a few of them, right? We prepare this code and we talk about one over COVID, one in the big early stages, and I like to cover, obviously, since it's insurance, the last test one, which is this SPAC on EPO over the summer. Let's start with your early stage. I mean, early stage. I mean, when you started this back in 2009, and can you walk us through, you know, one of your early home run? I don't know, whatever.
Sure. In 2008, I started in 2008. One of my second investment was a company called Chegg, which is today $12 billion public company. But actually, let me talk about maybe House, which I did in 2010. In 2010, I met the two founders are Israeli. By the way, I didn't say it, but most of my investments have something to do with Israeli founders. And this gives me an advantage because this is a tight community and people talk. So people know of me, not because they read something about me in the media, but because they heard about me from their friends. So it's a tight community, and that it really helps to focus on something specific and more. So I do not focus on a specific vertical, but I do have a focus on on Israeli entrepreneurs. But anyway, so it's a married couple living Israelis, but living in Palo Alto that moved to the US 10 years earlier, maybe. When I met them in 2010, they'd already been living in the US for at least 10 years. And they were still working for other companies. The husband was working for eBay, and the wife was some kind of financial advisor, and they were raising two kids. But they'd been working on House, which, for those who do not know, is is an app and a website for home remodeling. They'd been working on it for about 10 months as a hobby, after hours, after they put the kids to bed. And to my shock, despite the fact that no resources, no company, nothing, there was a website, really, really beautiful website with something like, I'm trying to remember, but I think a few, maybe 100 professionals who uploaded their photos, and a few tens of thousands of unique visitors. And I was like, wow, they did all that after 9 p.m. between the two of them. And on the spot, I gave them a couple of million to start the business, to incorporate it and really start hiring people. They grew organically very fast. Today, they are the de facto. There's nothing else in the Western world, US and Europe. Nothing comes close. Very unique. There's no House number two, and it's still a private company. Last time we raised was actually a while ago, but it was at $4 billion. To this day, I'm the second largest. Over time, I brought Sequoia, and they became larger investors than me, but I'm still the second largest. I'm still on the board of the company for the past since then. And hopefully at some point will be public. So this is an example that became, this is a very, very, very typical example where the main early backer take part in growing the company to invent a market or reinvent the market and become the market leader.
That's just great. Can you share the other example where you call an INSEAD friend or classmate to go and run and start a company that is now also a multi-billion company?
Yes, yes. This is actually, this is going to be a bigger winner for me than House. I believe. We'll see. In 2000, about the same time actually, in 2010. I got an idea. I was the chairman of advertising tech company, which interestingly eventually failed. but for a while it was succeeding, and it had thousands of publishers that they were paying every month, and it was a very, very painful process. And the founder told me, I knew about this, told me about this problem, and explained that they don't have the engineering resources to automate it. And it's manual, it's full of, and it's very, very problematic. And they were trying to outsource it, the payout, and they can't find a solution. If only there was something, he said, if only there was some cloud service that allowed that to happen. And that gave me the idea. So I contacted my best friend from INSEAD, also Israeli. And he'd sold his previous company a few months earlier, and he was ready to get back to do something serious. And I suggested that to him, and he knew nothing about payments and nothing about ad tech and nothing about anything close, but he was intrigued. And we kind of together scoped it and decided to give it a go. At the time, we thought it was a very small niche, but he was satisfied to do something like an interesting project with me. We really didn't think it would be something very big. Long story short, he built a great solution. I brought the first customers. I brought the first financial partner, which was Citibank. And long story short, it took us time to build everything, but now we are the leading platform for accounts payable automation. Last time we raised was we raised a $2 billion valuation, but today a more realistic estimate would be around 8 billion. I still own about 40%. My partner, my partner and I still control the company, and this is a very good. And we were classmates, so this is a great, I think, inside story. I think this has an opportunity to be the biggest company that comes out of Apex. There's still some people there's still some bigger than us, but I think we have a shot being the biggest story out of INSEAD ever, and we definitely have the aspiration. And yeah, so that's the story. That's something that I can see us doing for the next 10 years as well, because we feel that we haven't scratched the surface yet.
Incredible. Let's talk about last year during the COVID. You have some hard time with some of your companies. One of them, Trip Action, is in the airline industry. I think overnight went out of business. How do you manage this kind of stuff? And how? Yeah,
it didn't go out of business, lost all its business, but did not go out of business. Yeah, so before COVID, probably my hardest deal was indeed this company, Trip Actions. This was a company I seeded in 2015. And based on an idea, there was nothing other than the idea, but I knew the founders. I really thought how, and the idea was to reinvent business travel. And because the feeling was that the business travel solutions that companies use were 15, 20 years old. Everyone hated them, like things like Amex or Concur. Everyone hated them. And we felt that there was an opportunity to do something that puts not the consumer, the business traveler, the executive or the employee who travels in the middle, and really cater to them as opposed to do something that they hate. And we grew extremely fast, never seen anything like it. We became, I think, a unicorn 3 or 4 years later when Andreessen Horowitz backed us, invested. I led the seed NDA and was the largest investor. Lightspeed joined me later at the $1 billion valuation, I think in 2018. Andreessen invested, Ben Horowitz got on the board. 2019, their growth fund invested its $4 billion valuation. So this was a very hot, fast-growing company. And then COVID happened, and overnight, it never happened to me. Nothing close ever happened to me. Overnight, 99.5% of the revenues just evaporated, disappeared. Nobody was traveling. Obviously, our revenues are directly linked to business travel. They are linked to the flights and the hotels that people book, and 100% of it, 99.5% of it disappeared. Nobody was traveling in April 2020. In May, and the recovery was very slow. And in fact, even today, it's still very depressed. Consumer travel is recovering faster than business travel. Business travel is still maybe 20-25% of normal levels today. But miraculously, maybe, or not miraculously, I think that in hindsight, of course, we didn't want it to happen. And it was very painful when it happened, and we reacted very quickly. We had a very quick. We needed to let go of most of our customer support and some of our engineering team back in April. And by the way, we got a lot of grief from the media about it, which in hindsight was stupid. What are you gonna do if you're a travel company and COVID hits? What are you gonna keep it? All the people, but still, the media at the time, people still didn't understand what was going on, was giving us grief for moving fast. But ironically, I think in hindsight, we're going to look back and feel that it makes us so much stronger, because during COVID, the company dramatically increased market share. Before COVID, we were good. We were selling to the mid-market and down. Post-COVID, we were able to nail much bigger enterprise customers. So today we have Netflix, and we have Adobe, and we have Qualcomm, and we have Heineken beer, and we have many others. that have very large travel budgets. Even if they don't travel today or travel at a reduced level, they will go back to travel. And we also came out with a very successful expense management product. So we have a second product that is taking off, and we believe we're going to dominate that market as well. I can tell that today we are valued at significantly higher than the 4 billion. I cannot disclose it, but we're valued at significantly higher than the 4 billion that we were pre-COVID. And I think just like Amazon in 2000, when it got hammered in terms of valuation in the short term, but in the long term, really solidified it. Actually, Audible as well. If you remember, Minh, it predates our investment, but it almost didn't survive the bust of 2000. But when it came back, basically Audible was totally dominant and totally controlled. To this day, totally dominates the market. I think the same is happening with Trip Actions, so that it would make us stronger, not weaker. So, but it was quite an experience, quite a roller coaster, and quite a test, by the way, to the management, because the biggest risk in those situations, the biggest risk was not to run out of money, because we actually were lucky that when things happened, we had a lot of money in the bank in March 2020. The biggest risk was flight of talent, because, and by the way, the risk was not that big in March and April because nobody was hiring. But come June, all the cloud companies were recovering, and Zoom and who else? All these companies were targeting us like crazy. They were targeting engineers, and they were targeting our sales and marketing people, because it's it's the same skill. And the fact that, and it's not that we didn't lose any engineers, and it's not that we didn't lose any salespeople, but the fact that the leadership, we had some of the best people in the Silicon Valley, so everyone was going after our people, and the fact that we were able to keep most of them, and in fact we're able to keep pretty much all the executive team, I think is a testament to the strength of the founders and the leadership of the CEO. I think it's the ultimate test. And the company could have just disintegrated because we would just lose all the talent, and nothing would, and then we wouldn't be able to raise money, etc. And that was the ultimately test of leadership. And I'm so happy that the CEO rose to the occasion. And I think there's going to be a book written about this perseverance and endurance. I really think it's an amazing, amazing, amazing story.
Looking forward to the book. So, okay, my last question is more towards insurance. You are investors behind Next and Hippo, both a unicorn. Hippo went for a SPAC over the summer, which was the latest one. That was a company that went public. Can you tell us more, the background rationale, the story behind those two companies? Sure. And after that, I'm done. I will open the Q&A session.
Sure. By the way, of the two, my role is much bigger at Next. Next, I led the seed round. I'm on the board. I'm much more significant. Hippo, I had known the founders. I could have led the seed. I made a mistake and didn't. And then I could have done the A. I made a mistake and didn't. And only much later, I realized that they broke through, and I managed to convince the founder to let me invest, albeit, it's much smaller, not on the board and all that. And I cannot claim any credit for their success, because it succeeded without me playing any role. Having said that, so I'm a small investor. I'm not on the board in the case of Hippo. But let's talk about Hippo, because I think there is a lesson from the last few months. For those who don't know, Hippo is a fast-growing home insurance company, and about a year ago, maybe 10 months ago, the company decided to go public. They really looked great, and they could have gone either way, either traditional IPO or SPAC. And at the time, they decided the SPAC to go, because the thought was that it's going to be faster, it's going to be more certain, and we're going to get a great sponsor, because we have our pick. We could have chosen anyone. So we decided, or the company decided, again, I'm not on the board, but it's not like I had a different opinion, by the way. So I'm not saying that I knew better. The company decided, but it's not that it's only in hindsight that it was, that was clear to us that it was a mistake, but the company that, so I will say we, although again, we decided to go public through a merger with a SPAC. We really had our choice. We had the best SPACs. It was super oversubscribed. We decided to go with a very well-respected sponsor. It's called Reinvent, Reid Hoffman from LinkedIn and Mark Pincus. And we did this 5 billion pre-money, 6 billion post-money. The pipe was very oversubscribed, which by the way was not the highest offer that we got. The pipe was oversubscribed. Everything looked good. And remember, this is the period where the SPACs peaked. This crazy phenomenon of SPACs peaked, and that was in Q1. And then there is a process after the pipe is signed, but between it, the merger is complete and the thing starts to trade. Normally, it should take 3 or 4 months. In this case, it took 6 or 7 months because the SEC, there was some warrant issue, not specific to Hippo, but in general. And it started trading about a month ago. And as soon as it started trading, it started plummeting, and it lost, like within weeks, it lost 60% of the value. Now it's back to only losing 40% of the value. So it went from $10 to under $4. Now it's 5 and something. And obviously this is, it is a challenge. By the way, it's the same challenge as before. I'm not worried about the business. I'm not worried about the cash. The company has tons of cash. I'm not worried about the business. The real risk is losing the executives. And I feel very confident because I trust the management there. But still, despite the fact that I believe that they'll recover, it's in hindsight, we wouldn't have done that. And here are my conclusions. First, in hindsight, I think it was just too early for Hippo to be public. By the way, what happened, I should explain. What happened between January and started trading, 2 things, I think. First, the entire sector, the entire Insurtech went down by about 50%. So all the comps went down by 50%. The second thing that happened that was more specific to Hippo, their loss ratio was just terrible in the first half of the year. And the reason it was so terrible is because they are concentrated in Texas. And Texas had this natural, once in whatever century disaster, and they just got slammed with claims. So these are the 2 reasons why they got hammered so much. And the fact that I think SPACs just were very hot in Q1, but by now, they have bad reputation. So there are also technical reasons, but all these things combined. So what are the lessons? What are the key takeaways, I think? First of all, in hindsight, I think Hippo was just a little bit too premature to go public at all, either way. And I think it would have been better just to do another growth round and postpone until they're less concentrated in one state and just more mature business. So first of all, I think they were just too much, not mature enough to go public. But the other lesson is that I really think, I'm not going to make a big statement. I really don't think there is having learned everything that I learned about SPACs, and by the way, not just from the Hippo experience, but also I myself have a couple of friends with SPACs, and I'm on the board of one SPAC, just as a favor to a friend. I really think there's no reason for any good company to do a SPAC, ever. So the only reason is like special circumstances that there's some problem or some reason why they cannot go traditionally. Otherwise, either you can go traditionally or just do a growth round. Don't take the shortcut. I just think it's a mistake, and I want to keep it short, so I don't want to go into too much details unless there are questions about it. But this is the conclusion that I really come to. And I think SPACs are I think it was a very unnatural inflation of SPACs. And I think it's going to go back to what it was before, which is some exotic instrument used in some very rare, unusual circumstances, typically for second-tier companies. I just don't think it's a viable alternative for most companies that go public.
Then go back to Next, because you have a more active role, right? They raise
Next I'm much more active. I'm on the board.
They raise I think 250 million at 4 billion valuation according to what have you done for them, and what's
so Next, it's a good example because Next was at least as ready to go public as Hippo, but the CEO just made a different decision. He said, I don't want to be public. Why would I want to be public? Either way, not SPAC or no SPAC, doesn't matter. I want to stay private as longer so that I feel more mature. And I think in this case, he made the right choice. Again, I don't want to sound like I'm criticizing the CEO of Hippo, because I think he's great. And I didn't push back then. And so it's only in 2020, hindsight is all 2020. So I'm not trying to, but in this case, I think it was a mistake. I think he thinks it was a mistake, so going back to Next, Next, I led the seed round, and, I've been a board member ever since, and participated in some of the other rounds and helped where I could. I can't say that there's I can now think of a specific contributor other than that. Like, I think Next would have been just fine without me as well. I don't think that I did something special. In the case of Next, I think it's great management team, great leadership. And I think that what they're building is extremely interesting, speaking of insurance, because unlike other areas, I don't think this is a commodity, small business insurance. I think it's extremely complicated. It's much more complicated, for example, from a home insurance product. So from a product standpoint, it's extremely difficult because you have to support in an optimal way hundreds of classes of business, because it's not the same insurance for a photographer as it is for a plumber, as it is for an electrician, as it is for a coffee shop or a lawyer. And you have to support about 10 different lines of business, meaning product liability, general liability, commercial auto, et cetera, et cetera, et cetera. And you obviously have to do it per state. So think of this matrix, 300 times 10 times 50, it's like in each you need to be licensed. So just the complexity of the insurance operation is crazy high. And I think that Next Insurance has the opportunity to really dominate small business insurance in ways that I don't think is possible for home insurance. I think in home insurance, there are going to be several players, because I think it's more of the barriers are lower than it is in small business insurance.
Okay, thank you. Does anyone, I think we cannot chat in this Zoom, so anyone have a question, can you just introduce yourself and ask the question? I guess Eyal, you have a okay.
Yes. Hi. Hi, Oren. I'm Eyal. I'm fundraising.
Let me guess, you're Israeli, right?
Good guess. I'm actually living in France, obviously, and I'm a managing partner at a fundraising advisory firm for startup Series A, Series B. The question, I understand that part of your investments are in people that you know. My question is more for the people that you don't know. What would be your decision process? What are the things that makes you tick and saying, okay, this is the one?
Yeah, first of all, my decision process is extremely fast. Either I invest or I don't. It's typically 24 hours, 48 hours. If it's, I don't do lengthy diligence. If I have to do more than one phone call or 2 phone calls, I just don't do it because it's not obvious enough to me. Basically, either I know the people and I feel that they are proven, like the Next Insurance founders who had sold a company for $400 million before, or the Trip Actions people who had sold the company before, or I see early signs of traction, of indications that there's product market fit. For example, I just gave you the example earlier of House, where it was very early through revenue, but I could already look at the analytics, I could look at the engagement metrics and the growth metrics and et cetera, and realize that there's something there, that they stumbled upon something. Every single one of my investments pretty much falls into one bucket or the other, either somewhat proven business or somewhat proven product market fit with founders that I like, but they don't have to be proven, or proven founders and a business idea that I like, but doesn't have to be proven. But now insisting on at least one of them must be at least somewhat proven dramatically reduces the risk. That's why my hit rate is extremely high. Very uncharacteristic to the market. This means that if there is a very promising but unproven founder with a very promising but unproven idea, I'm not going to do it, and I may miss it. Maybe I'm going to catch it later, maybe not. But basically, that's the answer. You know, for me, if the founders are first timers, I would need to love the opportunity, obviously, but I would also need to see some proof of early indications of product market fit. I'm not going to do it beforehand.
Okay, very clear. Thanks.
Any other questions in the team? No? So let me ask you the last question. So if you are an LP, there's no chance to invest because you don't take money from LPs, especially the one that you know. If we want to co-invest with you, if there's any chance at all, and if do you invest outside the US with non-Israeli people that you don't know? And I think Francois has a question. Sorry, after me. So now you are mute.
You're on mute, Francois.
Excuse me, because I had a baby crying earlier. That's why I'm in the baby room. Thank you for allowing me. Hello, Minh. Hello, Oren. I'm an entrepreneur from Paris. I currently work in the fashion industry after some experience in M&A, banking in London. And I'm tempted by Insurtech. Very candid question on my side. What would you give as an advice to someone who would like to start the next insurance in France, for example? We don't have such anything close. And where would you start, please?
Yeah. I'm trying to think.
Very large.
First, it's a complex area. You know, I would say, and it requires a lot of funding. I learned both Hippo and Next really needed to raise a lot of money, and there's no way to do it without raising a lot of money. Obviously, you don't have to raise everything in the beginning. You can build it. You can prove things and build it along the way. I think that, generally speaking, I find that sometimes it's easier to disrupt the space from the outside because people within the space are too locked in the way they. So it's okay to start something naively without. And from that perspective, ignorance is bliss, you know, because like if you knew from the day one all the hurdles and obstacles, you probably would not have started. However, I do think that fairly early on, you want to complement your original out-of-the-box, outside the industry thinking with real deep knowledge of the industry, because otherwise you'll get in trouble. So, for example, Next Insurance, one of our critical hires early on was a woman who heads our insurance operations, and we have other people that we hired that from the industry who bring this. I do think that one idea which is true not just for Insurtech, but it's generally true. One advantage one can have in Europe is to look at the US and basically get ideas from the US and replicate it in Europe before the US companies have enough resources and mind share to focus on Europe. And usually there is a long gap. For example, Hippo, and not Hippo, both, but Next started, I think, in early 2016. So it's 5.5 years. And we still don't have plans to go to Europe, okay? So there is a gap in this case, at least 5.5 years, but I can also tell you that more because we're not gonna go to Europe tomorrow morning. Where there's this window of opportunity. Now that is true, you know, basically for any business. If you can see a good idea like whatever, the Uber idea or the Airbnb idea or some innovation that's happening in the US and you can replicate before the US company has, you know, focuses on Europe, but then you have something, and then either you have enough critical mass to withstand the Americans when they do come, or you get acquired by them, or not. In the case of House, we're able to start in Europe before anyone managed to do anything similar. But anyway, so I think there is an opportunity. I think the fact that you can point to successful companies in the US should help you with fundraising. You can also, it's a shortcut also because you can study them and see how they started. You typically want to start with one, obviously with one product. You cannot start with everything. Maybe you start with a more simple, with a simpler model. And by the way, the idea in the case of Next, the idea is that you have before Next, everything was done through agents, and basically Next basically took it online and started selling small business insurance directly on, you know, online, directly targeting the plumbers or the electricians or the photographers, what have you. But so yeah, that would be my my advice. I know I'm advising against myself, because maybe we should hope that nobody does anything in Europe until we have the time to focus on it. But you asked, so I'm giving you the honest answer.
Thank you. I appreciate. And then would you recommend to look for money in America or like stick to the French criteria where it's complicated to raise more than $1 million on just on an idea, you know?
Honestly, I think you want to raise where you can, because first and foremost, it's money. I mean, you know, especially in the beginning, as long as the money does no harm. Okay, obviously you don't want to raise. It's like marriage, so you don't want to marry someone who is gonna make your life miserable. Plus, it's actually worse than marriage, because in the case of marriage, you can get a divorce. It's much more difficult with investors. But as long as the money you don't think is going to do you any harm, I would take it, whether it's French or English or German or American. At some point, when you can choose, I would say go for the bigger pools, go for people who see the big picture, but go for people who can write large checks, etc. But you know, in the beginning, and a lot of it would depend on people that who know you, Francois. So because in the beginning, when it's just an idea, it's hard for someone to just that you know, there are many ideas. So so it really helps someone who trusts you, knows you, and at least to get started. Once you can show some signs of, some metrics, some signs of success, some customers, then you can go get introductions, get into get in front of VCs, and whether they're in the US or in Europe. By the way, there are, you know, there are good VCs in Europe as well. So there is less money, but there is money in Europe as well.
Okay, so thank you, Francois. In France, you have Assurely, which is a copy of Next. If you want.
Yeah.
Okay, I didn't even know that.
There's a bunch of them. They all start, but they're very, very tiny versus the potential of the market, I guess.
Fair enough. So there's still an opportunity. Yeah.
So last question before we close. I mean, when you pick up a company, and there was my question before, it's already a very signal, right? Because it's going to be a unicorn or a company that pick up. So can you share a bit where is your next pick and who you call for that? How to get a call from you for co-investments?
So to be honest, so first of all, I never know when my next investment, because I'm not thesis based, I'm opportunity based. I react to opportunities. Many times it's serendipity. It's someone I know, or someone who is very close to someone who's close to me, and I just see the idea and I said, "Wow, this is great!" Like recently, I invested in a company that I could never have thought. I imagined that I wouldn't. A day before I met them, I could never imagine that I would invest in something like that. And when I saw it, I said, "Wow!" And it's actually software and technology, AI software that allows to see underground from the air, and it was developed by the Israeli military for military purposes to identify from the air the tunnels of the Hamas, and the people who developed it for the IDF are now want to rebuild it and repurpose the technology for construction, virtual drilling for construction. I would never have thought about something like that. But when I started to say, wow, this could totally, huge market for that. This is the best team in the world to do it. So I never know, but the point is that I never know in advance. What was the second part of the?
And who you call when you make an investment? You don't need to call.
Oh,
anyone,
you typically no one, because I have typically, the truth is that typically I'm not the best sharer in the world. This is, when I see something, I just want to go all in. I want to do as much as with myself, and I have a lot of funds at my disposal. So I typically do not need anyone else. And if I do something with someone, it's only for competitive reasons. In other words, the company decided that it's gonna share the deal between two, and then they share between two people who competed for the deal. Maybe there was 5, the company chose 2, and so the truth is that typically when I share deals, it's typically not because I called someone and invited them to do with me, but now if I call someone, it would only be an individual who's writing a very small check, and I think can help the company. Or later stages where maybe the company is doing $100 million round, and then maybe I want to bring also someone else. But in the Series Seed A, even B, I typically do not. I just want to be very transparent, man. And this is, and so far this I never invested in Europe, and only in Israel and the US, mainly in the US, but the US and Israel. Again, I'm not particularly looking. I mean, if there's some circumstances where I thought that I had an edge, maybe through a relationship, maybe I'm not ruling anything out. But so far, I never have invested in a European company.
No, but thank you. Thank you. It has been a great pleasure to have you for the hour, and we learned about a bit more about the Zeev method. Again, I met you 20 years ago, and I'll probably follow your adventure in the next 20 years. So, congrats, and hopefully everybody enjoyed this moment. Thank you.
Yeah, thank you very much.
See you soon, and see you at the I'm looking forward to read on TechCrunch your next pick.
I never talked to TechCrunch, but okay.
But they follow you. They follow you.
All right.
Ciao.
Take care. Bye-bye.
Thank you. Bye.
Thank you.